All right, so how do you navigate this market? Better yet, do you navigate this market? Let us bring in Keith Wertz, Chief Investment Officer, Fifth Third Bank Corp. Keith, you just heard Keith McCullum talking about, more maybe a short-term view about we got to still short some of these things. We got a lot of problems. I want to take the other side of the coin, which is valuation. Right now, if you believe earnings estimates, that's one thing. But at least on a forward PE basis, according to my Thomson machine, 10 Dow stocks are now trading at single-digit forward PEs. Hewlett-Packard and Chevron have a 6 handle on their forward PE. Are there good valuations that should be bought now in this market?
That's the view we hold, Brian. If you look at the valuations of the equity market, and in particular in relation to other asset classes, stocks are about as cheap as we've seen in 40 years. It almost compares back to the late 70s, early 80s, and that was a moment in time when he had interest rates in double-digit conditions. And so from our point of view, stocks look cheap. If you have a longer-term investment horizon, we think the asset class of choice right now is the stock market. With the kind of volatility we're enduring of late, we think you should use this opportunity to upgrade your holdings because there's not a lot of discrimination going on in the stock market. Good stocks are going down with bad stocks. Exploit that indiscrimination and buy good stocks.
I guess I'll flip on my own question. We got to be contrarian here when we can, which I learned that from Herb Greenberg, which is this, Keith, which is you got to believe the E, right? And the markets are clearly discounting a slowdown. Whether it's going to be a recession or not, we don't know. Do you believe that we could be headed into another U.S. or global recession that would then cut the E and drive us back to normal valuations?
Let me put it this way. When the year started, the odds of a recession might have been suggested at 1 in 6. Today, it's maybe as high as 1 in 3, maybe even 1 in 2. We hold a view still, though, that we're in a slow growth environment and that a recession will be avoided. We're already seeing guidance on forward earnings coming down, and we think the emphasis should be on those companies that have earnings stability and consistency. That's the way to play this marketplace. Look for companies in sectors where you think you're going to have stability of earnings.
So, the next question, of course, is which stocks are they that you're talking about? And I also want to just mention to our viewers that the VIX, the fear index, is coming off its highs as stocks are coming off their lows as we speak. Keith?
If you were to look at sectors that are probably going to fit that quality spectrum, that earnings stability spectrum, clearly the staple stocks would fit that category. The healthcare stocks, we're seeing revision and rising earnings estimates, and that would be another way to play it. Two stocks that we like play into the energy and technology sectors of the economy because we're seeing resiliency in both those categories. One stock I like is EMC Corporation. It's a storage technology company. It's a company that's enjoying what we think is the sweet spot now in their product life cycle, and they also have the kicker of VMware, the virtualization software. The other company that we like is in the energy sector, and that's Schlumberger. Again, if you have a view intermediate term that oil prices are going to be trending higher over the next 4 and 5 years, this is a company that's going to do quite well.